Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, August 8th, 2013. Well, a change of trend today and a candle that's made a higher high and a higher low. Previous day's trading I suggested there was a strong possibility of a change of trend. We had a potential Japanese candlestick reversal pattern that was a hammer type pattern, and here we've seen confirmation of that change of trend today with the market making a higher high and a higher low. I also suggested that there was a possibility of the market testing to around the 1700 round number level of resistance, and the possibility of the market finding some selling coming in around this area, and that's exactly what we've seen today. The market tested roughly to there with its highs, and the small shadow shows that the buyers lost commitment up around that area, and there was some selling taking place. Having said that, however, the market has closed up towards the high, suggesting that the buyers have closed with control of this market, and does suggest that there is a possibility of this market trading above the 1700 round number. White body candle as well, so the buyers have made net bullish progress, and if we look at the largest shadow on the bottom here, we see the market interacting again with the 1687 level, and for the second consecutive day acting as support, so a very important level moving forward if this trend is going to change to the downside. So we have a market that's bound by strong resistance overhead at 1700, but solid support down below at 1687. Even stronger support down below that area, down to the top of this highlighted yellow zone at 1675, and that's in line with what we've mentioned for the past few trading days. So a fairly bullish candle, only still a small body candle, but certainly 1700 is very, very important if this market is going to trade higher. In terms of the Fibonacci extension, and here today we've seen the market test above the 38.2% level and close just at that level. It does raise some doubt about continuation of the trend to the downside, but having said that, this is a fairly bullish candle. The buyers have made net bullish progress. The buyers have closed with control. We've seen the sellers lose commitment down around the support area, and there is a possibility of the market trading higher to the 50% level. That's at 1701, coinciding with an area just above the round number 1700, and also the 61.8%, which is at 1705. Moving on to the Fibonacci retracement, and here we've seen the market interact with the 61.8% level and be rejected from there. That's the high there, that was around 1700, and closed just at the 50% level. So there was some rejection and possibility of a change of trend, but certainly doesn't seem likely with the buyers being in control of this market at the close. In terms of patterns, this market as it's trading has the possibility of forming a pattern, and that's a head and shoulders pattern with an upward sloping neckline. As with all patterns, we require a decent trend moving into them, and here we have a trend. That's one thing that we really do need to be aware of. Some people can find patterns everywhere, and patterns are just really congestion areas, or in this case over a large area, and this is an upsloping area of some sort of congestion following this strong trending pattern. But people that see patterns where there's no trend leading into them are really not analysing in a robust manner, because you don't have a pattern unless you have a trend leading into it. Here we have the trend leading in, and a very decisive trend, very strong price action. Here we have a complex left shoulder with two shoulders in it. Potential or a head has formed here, and a potential right shoulder if we do see the market form a peak around this area. So here the 1700 round number level of resistance is important, and if we see this market make a lower high and a lower low, it will complete a right hand shoulder. Having said that, we've drawn in the neckline, and what we're looking for is a close down below the neckline, and the potential target will be the distance from the top of the head down to the neckline projected from the breakout. Now, we don't know that that's going to occur. This market could continue trading up in this first time frame uptrend and then form the right shoulder, or the market could take out this high and thus negate any potential head and shoulders pattern at the moment. But this is being highlighted for the fact that there is a good possibility of that occurring. Now, in terms of Ichimoku, a bullish market in all three time frames. Once again, the market's trading above the cloud, so a bullish market in the long-term time frame. Bullish in the medium-term time frame by trading above the Kijun Sen, the pink line, and that Kijun Sen is still pointing flat. Price action was attracted back towards it, and now we have price action moving away from the Kijun Sen, and that says something about the strength of the buyers in this market and the lack of strength from the sellers as they've interacted with this important area of support. The market has once again crossed just back above the Tenkan Sen, and that gives us a bullish market in the fast-term time frame. But as we saw here previously, we had the market oscillating above and below the Tenkan Sen, and that highlights a very indecisive market. So until we get a decisive break up above the Tenkan Sen, I certainly won't be happy with there being a decent change of sentiment in that short-term time frame. I'd like to see some decent follow-through, and follow-through would mean the market trading up above the important round number of resistance, and we know that resistance and support acts in a zone, so it's not just exactly at that round number that we're expecting to see resistance come in, although we have seen that today, but it could act in a zone above there as well. So what we'd like to see is bullish activity up above the 1700 level to give us greater confidence in a move. Now obviously the market, if it does trade higher, will potentially meet the solid resistance of around 1709, but if the market can build up solid momentum with a test up above 1700, we could see the market take out that 1709 level. But really this market is bound by strong resistance overhead, solid support down below. We really do need to be patient for resolution of this. The Ichimoku indicators are suggesting that the next move is likely to be up. We have solid momentum with the checkout span being above the corresponding price action, and thus confirming the bullishness that we're seeing in all three time frames. But 1700 is really crucial. If we get that bullish breakout, as I said once again, we could see the market trade higher.